Good morning, everybody, and this is your S&P 500 day trade setups for today. So pretty glaringly obvious little bit of structure here, and it does look like a triangle trying to form, and that would be a flat bottom triangle, which is a bearish pattern, but also a range. So this was the previous double top, and when you get a double top in the past, often what happens is you'll get a break above it and then it doesn't hold, it falls behind. So it becomes a fairly significant level to pay attention to. And you can see we broke above it down. We tried again pretty much yesterday, and we failed. It was yesterday, late yesterday, or early yesterday, should I rather say, and we failed. So now we're back down to the downside, So the trend is up at the moment, so reversal may very well still be in play. We are above the moving averages. Oscillators have crossed over and started moving to the downside again, which is fairly significant because this crossover here has failed. And normally when you get a crossover this far apart, it is an indication that we are looking for a bigger move to the upside. So two scenarios for me, to be quite honest. It's fairly simple. And this is the one that I'm more than likely going to favor. We're probably just going to sit in this channel for a bit. This was a big move. It needs some kind of consolidation, so maybe a little bit deeper of a consolidation. And the 155 EMA is definitely something I want to be paying attention to. Now, pay attention to the left. Look at all the tails that are playing around at this level. So that is a fairly strong level. That is at 4,400. So 4,400 is my line in the sand anyway to pay attention to. A 3-hour trend is still up as well. Above the 155. There's no indication that the trend has finished yet. No moving average crossover. No drop below the 155. So you should still be looking for your opportunities to the upside, but cautiously, very, very cautiously at the moment, because it could be a top. But for those of you that have watched me for a while, I don't try and second guess tops and bottoms. Wait for the confirmation before getting that. And we're looking for the confirmation for a turn to the upside on the 8-hour. So on the 3-hour, this level is fairly significant. That's 45.13. And then obviously 4,500 is going to be significant as well. But failing that, 44.50 and then 4,400 would be the areas to pay attention to. Dropping down to the hour, and you'll see what I'm talking about. We had a crossover yesterday. Really was looking significant. Only concern I had was that we were grouped to the upside. Looking for the structure. Got a little bit of structure here off the moving averages, but obviously that's not what we were looking for. We were looking for that area there. We did get a bounce above it on a single 1-hour bar, but that didn't really play out. And if I just drop to the 15-minute quickly, you can see we're looking for support here. We didn't get the support. There was a sort of a tail below it, and then a buying candle, or green bull candle, but below the level. So whenever we sort of have a body below the level and then a growth, I stay far away from it, because that's often just a trap. And you can see what we did. We actually came back to test the previous support, which was there with the 155 and a crossover. So that was actually your signal for a short. Just to follow up from this big bar here. Okay, so for me at the moment, there was a bit of a complex trade. Hindsight's always a perfect science. We did get some buyers come in here off just before the close, but I think that was more profit taking than buying. So at the moment, if you look at the 15-minute, the trend has reversed and it is looking to move to the downside. So you'd be wise to pay attention to your 15-minute chart. And I don't want to get it too busy, but this is the zone I would pay attention to at 45.43 and 45.38. So that's the area that I'd be paying attention to for a bigger move to the downside. So there's a lot of noise at the moment on Ukraine and Russia. So I think the fear is of what level the West are going to get involved. So that's basically what we're reading in the chart. We do have earnings season coming up shortly as well. So, we could just be in limbo waiting for that as well. But for me at the moment, there's just so much going on, which just adds fuel to the confusion. And if you look at the charts right now, specifically on the hour, you just look at what's in front of us now, there's no clear indication of what's going on. We're actually in a big range, to be honest. I mean, if we just delete all the noise and just use 2 horizontals, there's the bottom and there's the current top. That is the range we're in. We need to break free of that before we can get a direction. So that's kind of my view, simplistic view at the moment. So it's a clear sit on hands. In other words, I think all the indexes for me are sit on hands. There's a little bit of opportunity on the dollar, which I'll pay attention to, but it's more going to be little scalps than anything else. But for me, indexes are pretty much sit on hands and wait. Let's just see what's going to transpire through earnings season, and also what the West are going to do with Russia at the moment. I think that's a critical thing we need to pay attention to. Anyway, that's it for me today. Hope it helps you, and we'll catch up with you tomorrow morning. Cheers for now.